Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 10th of January in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, rising borrowing costs put the UK government's grand economic plans in peril.
Authorities brace for a worsening tragedy as the Los Angeles wildfires continue to burn.
Plus, why Donald Trump's obsession with Greenland has put the world's largest island in an unexpected position.
Let's start with a roundup of our top stories.
The UK government's economic project is close to being in tatters after this week's market turmoil. Investors have dumped gilts in the pound, signalling fears around inflation and low confidence in the government's growth plans. Bloomberg's chief UK economist Jan Hansen says it's a verdict on the plans from the Chancellor Rachel Reeves.
What the market wants is austerity, because I think, for me at least, I can't speak for all market participants clearly, but for me I think the biggest concern is around growth and around the OBR's optimism around the growth outlook.
Hansen adds that Britain is a victim of global market moves, of the UK is particularly badly hit. The pound fell to its lowest level in over a year, down 1% to $1.22 on Thursday, while the 10-year gilt yield closed little changed on the day at 4.81%. That's near the highest level since 2008. The domestically focused FTSE 250 index closed near the weakest level since April. The market move comes as the Chancellor Rachel Reeves heads to China. Opposition politicians had called on her to call off the trip, which is the most high-level visit by a British official to Beijing in 7 years.
Well, Britain's market upheaval has put the spotlight on its fiscal woes, but economists say that the Bank of England may also have to slow interest rate cuts. While the BOE is not expected to intervene in the volatility, it may have to demonstrate a renewed commitment to tackling inflation. JP Morgan's global economist Nora Centavania says that the central bank will need to re-evaluate.
I think it's going to be increasingly difficult for the Bank of England to have confidence in reducing interest rates further to the extent that the markets had previously been pricing. So I think that wiggle room for the Bank of England is now much narrower, especially if we don't get further fiscal deficit consolidation.
Centavania's House view is that the Bank of England has space for one cut in the near term. Despite the market view, the central bank's deputy governor, Sarah Breeden, backed further interest rate cuts in a speech yesterday.
Today's US jobs report is expected to show non-farm payrolls rose by 165,000 last month. That's according to Bloomberg's survey of economists. Such a figure would mark a step down from November and add fuel to the narrative that the labour market in the United States continues to moderate only gradually. Today's data, due out at 1:30pm London time, comes after more Fed policymakers signalled the central bank will likely hold interest rates at current levels for an extended period. Here's Governor Michelle Bowman.
I also continue to be concerned that the current stance of policy may not be as restrictive as others may see it. Given the ongoing strength in the economy, it seems unlikely that the overall level of interest rates and borrowing costs are providing meaningful restraint.
Governor Michelle Bowman's comments were echoed yesterday by the Boston Fed President Susan Collins. She says a slower approach to adjusting interest rates is merited now as officials confront considerable uncertainty.
Now to other news. Ongoing wildfires in Los Angeles have killed at least 10 people and forced 180,000 residents to flee. Estimates from AccuWeather put the economic losses at up to $150 billion, which would rank among the highest for a natural disaster in US history. LA County Sheriff Robert Luna says the number of casualties is likely to change as relief efforts continue.
At one point, we'll be able to do a more thorough search of these impacted areas. Some of them look like a bomb was dropped in them, where we will be able to bring in canines and other things to help us hopefully not discover too many fatalities. That's our prayer. But this is a crisis, and we don't know what to expect, but we're ready for everything.
LA County's Robert Luna speaking as the fires have now scorched more than 30,000 acres. Officials say that they are hoping the tide against the blazes is turning, with forecasts predicting the wind that has fanned the flames will weaken later today.
China's central bank says it will suspend buying government bonds as supply has fallen short of demand. The move is being seen as an attempt to temper investor bets on weak economic growth that have undermined the yuan and sapped business and consumer confidence. Christy Tan, Institute investment strategist at Franklin Templeton, says action is being taken to alleviate fiscal pressures.
It is definitely a countermeasure to deal with the falling bond yields. And we've seen this, unprecedented moves in Chinese government bond yields decline recently. And that is at the point where it is actually putting a pressure on the RMB. So all this is manifesting into some kind of a response function from the PBOC, understandably.
Christy Tan from Franklin Templeton there, speaking on Bloomberg Television. In a statement, the People's Bank of China added that it will pick a time to resume purchasing sovereign debt depending on market conditions.
The world's richest person, Elon Musk, has once again waded into next month's German election. He live-streamed a conversation with the co-leader of the far-right Alternative for Germany party, Alice Weidel. 3 AfD state chapters are classified as extremist and are under surveillance by Germany's domestic intelligence service. But during the X Spaces event, the Tesla and SpaceX CEO once again endorsed the party.
I think only AfD can save Germany. And I just want to be very clear about that. Only AfD can save Germany. End of story. And people really need to get behind the AfD. And otherwise, things are going to get very, very much worse in Germany.
Elon Musk has extensive business interests in Germany and has been a key advisor and major donor to US President-elect Donald Trump. Germany's leader, Olaf Scholz, has previously responded to Musk, saying freedom of speech means you can say things, quote, that do not contain good political advice.
Executives at top Wall Street investment banks are planning to award traders and deal makers with their largest bonus increases since the pandemic. The expected double-digit hikes from many desks reflects an upturn in business and optimism for the year ahead. With more, here's Bloomberg's Charlie Pellet.
Sources say bonuses will rise more than 10% for traders at Morgan Stanley and JP Morgan Chase and around 15% for JP Morgan's investment bankers. Among senior industry executives, it's broadly expected that Goldman Sachs will go even further for some of its trading desks. The raises follow 2 years of industry-wide restraint as investment banks struggle to maintain the flurry of trading and deal-making they handled at the height of the coronavirus pandemic. Wall Street's year-end rewards are notoriously volatile as the industry cycles through booms and busts. In New York, Charlie Pellet, Bloomberg Radio.
Those are our top stories for you this morning. In terms of the markets, US Treasuries, the rout that we've seen in recent days, took a breather on Thursday ahead of the non-farm payrolls data we get today. The gilt sell-off also paused. 10-year gilt yields rising 2 basis points yesterday. The pound, though, did fall nearly 1%. European stocks yesterday managed to end in the green. Stock futures right now are in the red, though, for Europe and for the US stock futures. In Asia, Chinese yields edge higher after the PBOC suspended buying of government bonds. Japanese yields hitting fresh cycle highs. And you've also got the Bloomberg Dollar Spot Index back up 0.1%. So a fourth day of strength for the US dollar.
In a moment, we'll bring you more on what the UK market turmoil this week means for the Chancellor Rachel Reeves and for the Bank of England, plus why Donald Trump's Greenland attempted land grab remarks have bolstered the country's independence movement. But to another story that caught our eye this morning, and to a product that I suppose gets a lot of attention at this time of year as people are perhaps trying to ease off the indulgences after the festive season, and this is non-alcoholic spirits. Our colleague Mark Laydorf, though, has been writing about while the marketing around these is very much around the idea of you being able to have a drink that might look like an alcoholic drink and make you feel more involved in festivities, that there's a whole cohort of people out there who don't want that, and that it's not essentially targeted at them.
Yes, and this is particularly people who might be in recovery from addiction. And he's looked at a lot of the brands. He says that they're pushing this kind of general concept of wellness, but actually 49 million Americans, it's thought, have some kind of substance use disorder. And he's saying essentially that these products are really not inclusive inclusive of those people, which I think is just a really interesting read. The kind of framing of wellness and these sorts of products. He discusses all the marketing and the taste of a number of these different brands in this space: Seedlip, Free Spirits, Pentire, and Athletic Brewing, all the different names in this market that is growing, or maybe being invented, or being kind of given to adults. I think it's a great piece.
Certainly for brewers, it's been a huge move towards low alcohol or no alcohol beers, and with good success, I think it's fair to say, looking at the numbers in this as well. But certainly a very interesting perspective and a thought perhaps going into your weekend if you're attempting not to indulge, I suppose, what's being marketed at you on that front.
Yeah, absolutely. Right, let's turn our attention then to the turmoil that we've seen. I mean, the turmoil in UK assets and what is next after a week that's seen the pound tumble and gilt yield surge. Although they took a little break yesterday, it has been an epic week. Our managing editor for FX and Rates, Rachel Evans, has been with us throughout the week to discuss this. So, Rachel, good morning. The Bank of England has not intervened, is not expected to intervene, but markets are starting to think that it might mean slower interest rate cuts. Why would the Bank of England have to slow interest rate cuts, and will it?
Yeah, so I think this comes back to sort of the two main factors behind the turmoil this week. You have really been supply and then also inflation. Now, the Bank of England isn't in control of supply, but it is tasked with reining in inflation. So the inflationary pressures that kind of the market has really started talking about again, in earnest, have really been, partly, largely as a result of sort of the incoming Trump administration. But obviously, inflation has been a really big problem for the UK already. We've seen very sticky price pressures here, and with kind of that new administration coming in and expected to sort of potentially increase inflation with tariffs, for example, there's a renewed focus on that, and that's something that's going to be worrying the Bank of England. So yes, as you pointed out, traders have really been reining in sort of their expectations for how much the Bank of England could cut. Sort of heading into this week, 2 cuts was seen as a lock, and there was kind of a sort of likelihood of a third as well. Now we're back to sort of seeing 2, flat, as it were. So I think it's going to be something that, is going to draw a lot of attention to inflation data in coming weeks. We do have CPI out next Wednesday. So that's going to be sort of the market's first chance to see perhaps what the Bank of England might need to react to.
What about questions over the quantitative tightening programme and how adjustments to that might help ease some of the tensions on markets in a less dramatic way than shifting the interest rate path?
Yeah, so I mean, the QT program has been rolling on for a while. It is pretty substantive. We're looking kind of at 100 billion a year, but it's worth remembering that a lot of that is now coming from redemption. So bonds that are maturing that the Bank of England holds, and there's only about 13 billion pounds worth of active sales expected this year. Now, obviously, that's a chunky number, but in the context of how much that the UK is trying to sell already, about 297 billion pounds of debt, it's not a huge number. So, of course, all changes in supply, help the market to a degree if they're going lower. But I mean, this seems like something that's not necessarily going to be on the table, particularly as we're not at a point yet where we're seeing any concerns about liquidity, which would be sort of a market functioning issue that the Bank of England would want to address.
Pulling out to the more political angle of this, does Chancellor Rachel Reeves have to do a repair job in the spring statement? She wanted to do the tax and spending decisions all in the autumn, only once a year, but the pressure is now mounting.
Yeah, I think that's a good observation. I think we're obviously unsure of what exactly she will have to say, but clearly there's going to need to be some, at the very least, messaging about how the government maintains credibility given these questions that are being asked by the market. The market is telling us very clearly that there is too much borrowing and that they are not sure how the books are going to balance, particularly with debt costs likely heading higher globally or staying high globally globally. That's something that hasn't necessarily been factored in by the UK in terms of how they're thinking about sort of the money coming in and the money going out. So there's going to need to be some comments, maybe even before the spring statement, that sort of explain kind of how those higher debt cost figures impact the situation. We've had some nice reporting this week that suggests that sort of spending cuts are likely, given sort of the government has been very forthright about its desire not to raise taxes. So I think we'll obviously see whether that comes through in the spring statement, or whether this is done in a more incremental way. But it certainly does feel that Reeves does need to address this at some point in coming weeks and months, in order to kind of try and bring the market back on side and make sure that they have faith in the Labour government to kind of keep the economy on track.
Rachel, in terms of the outlook for sterling, weaker again this morning slightly. There are some banks, including Wells Fargo and Deutsche Bank, that say there's room for sterling to drop further. What should we be watching out for?
Yeah, I mean, I think, yes, weakness, definitely. We're seeing some of the most bearish positioning for sterling in years. I think Wells was looking at it to go below 1.20. Obviously, we're quite close to that already. So I think, something to watch out for is really just kind of Wall Street recalibrating its sterling forecasts. There's going to be a lot of people currently in the city and further afield who are thinking about kind of what this looks like longer term. I've certainly seen some suggestions that even if yields stabilise, sterling itself could be the thing that becomes the real driver of sort of woes for UK markets. Because of course we have to remember that sterling is not just being driven by UK factors but also US factors, and a stronger dollar is something that's very much anticipated this year, given what we were talking about around sort of the Trump administration, whether they're going to sort of mean that inflation is back and rates stay higher in the US. So strong dollar means weaker sterling, all else equal. So I think that's something that we'll want to watch out, that kind of cross current from overseas.
OK, Rachel, thank you so much for being with us then. And the indication is what we should be watching in markets. That is our managing editor for FX and Rates, Rachel Evans.
The US President-elect Donald Trump says Russia's Vladimir Putin wants to meet him and that an encounter is being set up. The latest indication of Trump's approach to foreign policy during his second term comes after a week in which the incoming US leader once again raised the prospect of trying to buy Greenland, declining to rule out the use of military force to take the territory. Russia says it would react to any expansion of the US military presence there, while the Danish Prime Minister has once again ruled out a sale of the island. But for those on the self-governing territory, the comments have also had an impact, leading to a renewed push for independence. Joining us for more on this is our Copenhagen reporter, Sanna Vass. Sanna, good morning. Could Donald Trump actually buy Greenland?
Well, the short answer is no. Greenland has made it very clear it's not for sale. It never will be for sale. But I think even if Trump doesn't succeed in buying Greenland, he's definitely laying the groundwork for more power in the region. And I think the timing of Trump's comments, and you may have seen also his son visiting the capital of Greenland this week, which really made everyone talk about Greenland. The timing is interesting because back in 2019, when Trump first suggested to buy Greenland, this was quickly dismissed as a joke. But what's changed since is really that Greenland has been moving closer towards independence from Denmark. And Trump is absolutely capitalizing on that. He wants to get more influence when it happens. Greenland it's the world's biggest island. It's very important to the US geopolitically. It's already home to a US military base and it's got large reserves of critical minerals. So Trump, he really sees opportunities here.
Yeah, and it does seem to be adjusting things, doesn't it, Trump's position? It's a huge space. It's a tiny population, 56,000 people who live in Greenland. The relationship between Greenland and Denmark, I mean, how close might Greenland be coming to independence?
Yeah, today it's formally a self-ruling territory of the Danish kingdom. And that means that Greenland controls most domestic issues and then Denmark is in charge of foreign policy and security. Greenland has long wanted to be their own nation. One of the key challenges has been an economic one. Can it become independent and still sustain itself economically. But it has been gaining more autonomy in the past few decades. And now it's really in the final stages of that journey towards independence. They now have a draft constitution. Last year, they also published a blueprint for what their foreign policy might look like. And then there's a general election coming up this spring in Greenland, and that will really define the path forward for the territory. A referendum, it may still be some years away, but it definitely could happen while Trump is president.
What does Donald Trump's interest, though, mean for that path for Greenland?
I think it's helping in a way to accelerate Greenland's independence push. Because he's sending a signal to the Greenlanders that they won't be on their own if and when they become independent. And that's very important for Greenland. I said before that the economic question is a big one. Today, Greenland receives financial support from Denmark, and they will need someone to provide that money once they become their own state, whether that's from Denmark or the US or somewhere else. Greenland will be looking for new partners. So in a way, Trump's comments and all this attention to Greenland, it's put Greenland in a position of power. Now more countries are interested, and it can use that to get a more beneficial deal, both for itself now, but also once it decides to break away from Denmark.
And so a final word then on Denmark's position here.
Yeah, the Danish government is definitely in a difficult situation because on the one hand, US is Denmark's most important ally. And then, of course, on the other, we have Greenland, which is an important part of the kingdom. And Danes, according to polls, they generally don't want to give it up. But it seems that Denmark is really trying to take this very diplomatic stance. It wants to avoid a crisis with the US. It's put a very positive spin on it, saying that it's welcoming US interest in Greenland and wants to collaborate more with the US. And on the other hand, with Greenland, it's the rhetoric has changed too. The Prime Minister of Denmark has made it clear that it's Greenland that will determine Greenland's future, not Denmark, and not the US for that sake. But there's no doubt that she's under a lot of pressure now to give Greenland more or offer a better post-independence deal. And I'm sure with Trump as president for the next 4 years, that pressure will definitely intensify.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.